Everyone, we will just give it a few seconds to allow everyone to connect. Thank you very much for joining us today for April's Economic Trends Forum. So our Economic Trends Forum, we started about a year and a half ago, and it offers market analysis and insights for our corporate members and members of National IAB. And I'm delighted to be joined by our regular host, as always, Dr. Daniel Knapp, who is IAB Europe's Chief Economist. Daniel has been tackling lots of different subjects. Over the last 12 months, we've been dedicating the Economic Trends Forums to the pandemic and to looking at investment trends. And we are hopefully fairly back to normal now, where we're able to provide some deep dives into some industry topics. So today we will be exploring e-commerce. Before I hand over to Daniel, we are live. This session is being recorded, and because we're live, we really do encourage questions from the audience. So if you have any questions when Daniel is presenting, please put them into the Q&A box, which can be found at the bottom of your screen, and I will present those to Daniel at the very end. And with that, I'll hand over to Daniel. Thanks so much.
Thank you very much, Helen, and warm welcome from me as well. I'm just going to share my screen. Here we are. Today, we're going to speak about probably one of the major drivers of digital advertising during the last year, the rise of e-commerce. E-commerce itself doesn't require any introduction. We all know how important it has become just looking at our very own lives. But what has been less clear really is how the economics of e-commerce and advertising are really linked, and how e-commerce, number one, requires advertising, but also how, number two, the ad industry itself, with the metrics it provides, the services it offers, is changing and needs to change in order to tap into the e-commerce opportunity. This presentation today is a bit different from its structure compared to previous Economic Trends Forum, in the sense that it is not exclusively just about advertising. We need to drive look a little bit more into kind of the macro drivers behind e-commerce, particular what's happening in e-commerce, and is the uptick, we've seen the massive uptick, is that going to persist? Or is this actually a cyclical development, and as economies are reopening, we are kind of regressing to a pre-COVID world of e-commerce? My presentation will take about 25 minutes, and then I'll be very happy to take questions, and I'll encourage a very lively debate. So without further ado, let's dive in and just have a little bit of a reflection. Why did this year 2020 in digital advertising turn out better than expected? Now, there are three buckets in this. There's the macro environment, consumer behavior, and also how advertisers have been using digital media during this time. Our latest analysis suggests that digital advertising grew across Europe at around 4% year on year in 2020. The exact numbers will be released at our Interact conference at the end of May, but early checks from National IABs already present a very positive picture, with growth rates of about slightly negative to flat to, well, nearly double-digit growth, depending on the market, with an overall probably average of around 4.2% as it stands right now. So the macro bit is pretty clear. There's a fixed end to the crisis in sight right now with the vaccines. And also we've seen much stronger and earlier intervention by central banks, which meant that in comparison to 2008 and 2009, we have seen households, consumer households, much less affected than in previous recessions. And this has of course meant that expenditure, despite higher savings rates, was going to continue at a higher level than anticipated at the beginning of 2020. Consumers, of course, have changed their behavior in terms of online streaming and so forth, but a key component in this, of course, has been the rapid adoption of e-commerce, and we've all seen lots of charts about this throughout the last year. But attached to that is also an advertiser behavior. We've seen, and that's related to e-commerce, that advertisers have learned during this pandemic, which means that after many went dark in the beginning of April and 2020, they reinvested quite quickly, most in Q2 or Q3. And if you troll through company reports of major FMCGs, for instance, you could see that they were doubling down on advertising, investing more than initially anticipated. And their sectors haven't been affected as much as in 08 and 09. So in particular, FMCGs were very, very strong in the last year, all posting quite strong company results. And we've also seen, and this is very important for e-commerce, we've seen that SMEs or small and medium or SMBs here have seen digital advertising as a lifeline. They realized that they need to invest in advertising in order to sell their goods and services. So advertising moved up higher on the balance sheet. And that's important in particular for e-commerce, where advertising, awareness, consideration, and purchase, and I'll talk about that funnel, how that's been compressed in a little bit, has become incredibly important. So deploying e-commerce also entailed deploying advertising to drive people to the stores. We can just see from our own experience how important e-commerce has become. This is a picture from Alex Bell on Twitter, which has captured a regular evening in London in March 2021. And you can see just at one street corner, 4 grocery delivery vans parking and delivering their goods. This is a common picture across all of Europe, just showing, without any data, just from our experience, how e-commerce has become ingrained in the daily lives of people. And you've seen charts like this, of course, looking at the ONS in the UK, Office of National Statistics, and other institutes across Europe, that we moved from a fairly linear growth in e-commerce. You can see clearly in this chart the cyclical blips and highs and the lows. During summer period, the lows, and then higher growth at the end of the year. We moved from a fairly linear development to an exponential development. And if we do an extrapolation, we can see that if we continued on the growth trajectory normalized for cyclicality that we had previously, it would have taken probably 9 years, where the UK had been in June. And if we say, right, if the economy opens up and e-commerce, even contracts by around 50% from that peak, we'd still be in a 5-year leap exactly in June 2025. And this picture is also apparent in other e-commerce markets. We needed to build a different model for the US. You can clearly see the curve in the US is quite different from the UK, where it was actually on an earlier stage of development, and we have just been entering in 08, and so in 2018, 19, and the beginning of 20, the first part of an exponential curve where growth was really accelerating, even pre-pandemic. So that makes it more difficult to forecast how the situation would have been had the pandemic not occurred. But if we take this kind of exponential growth here and track the line, we could see that it would have still taken 16 quarters based on the kind of pre-COVID growth to reach the peak that we actually saw in the US in April 2020. So a massive leap in other markets as well. The key question with all of this is, though, is this going to persist? Or are we moving back into a world where e-commerce will continue on this linear pre-pandemic trajectory? The jury is still out. We don't have fully robust numbers to say with certainty that this trend is going to continue, but there are some very good indications. And have a look at this slide here, which shows the average weekly value for all retailing, excluding internet, and then the average weekly value for internet retail sales. So here, not in terms of percentage, but in terms of absolute volume, because it's pretty clear. If the economy shuts down, the physical economy, of course, the percentage of e-commerce goes up. There's a very favorable environment for it to go up, right? But if the economy opens up and e-commerce is now competing again with brick and mortar, how does this situation look like then? And to assess that, we need to look at the absolute sales numbers in pounds, in euros, in dollars. And what we can see with the UK being ahead of the curve in terms of vaccines, and after the strict December lockdown, we can see that in absolute numbers, if you look at the dark blue bar chart, that the growth of online retail sales is going to continue, which means this is a good indication that even if economies progressively open up, e-commerce is not going to shrink in absolute volumes or move back to what it was pre-pandemic. There's some other indicators as well. If we look at various forecasts, we can see that while 2020 was the peak growth of e-commerce, we actually saw that total e-commerce sales, this is B2C, by the way, grew by around 35% in 2020. By no means are we entering a much slower phase of growth. We're actually going to see double-digit growth continue until 2023. This is our own blended forecast at IAB Europe, combining data from various industry associations focusing on retail, commerce, and e-commerce across Europe, meaning that the industry can build on the infrastructure and changed consumer behavior in 2020 to continue the growth trajectory in the next couple of years. There's a caveat here, and yes, we see the growth is slightly slowing down to 17% in 2021. That is, if you look at a lot of big ticket items, think of sofas, fridges, and other, in particular, big ticket kind of home improvement goods. A lot of the stuff has been moved ahead a couple of years to 2020. So if you look at groceries and other things, products of daily use, that is likely going to continue at pace, but other things are slowing down, or sales won't happen with the same magnitude in the next couple of years because just these goods have already been bought in 2020. But it means that the logic, the ability for people, the willingness of people to buy even bigger ticket items online is going to remain. And once these goods are being replaced, there's a good chance that these purchases will be conducted online. I said there are some other indicators that suggest that although we're seeing a slight slowdown, the overall momentum is going to persist. And I want to focus on three different things here. The first is always a good indication when you look at the growth of an industry, whether a cottage industry around it is emerging, so an industry on the industry. We've seen this in digital advertising, right? We've seen it in programmatic advertising, where once the pipes have been laid, new service models were invented. Optimization came to play. We saw outcome-based marketing. We saw new players offering brand safety, offering other services, supply path optimization, and so forth. So a cottage industry emerged around the primary industry to continue to boost it and to add value. We're seeing something similar happening in e-commerce. In particular, we see lots of venture capital being poured into aggregation services. For instance, you've seen lots of fairly small shops occur on Amazon, on Shopify, and other platforms, which were doing rather well in the pandemic. And what we're seeing now is aggregators that buy up these brands to provide a unified infrastructure and more professional sales, placements, and optimization in order to take these brands to the next level, or even turn them from just providers of products into recognizable brands. The other thing that we're seeing is, of course, that the logistics industry itself had a very good 2020. And if we look at data from Parcel Tracker, so you can see these three companies, or four companies combined here, DHL, UPS, and others, made around $300 billion in revenue last year with strong double-digit growth. So that kind of supports e-commerce. And if we look at Parcel Tracker, which is an app that allows consumers to track their online deliveries, and look at the recent data there from February and March, we see actually in terms of order volume, a continuation of growth versus 2020, both year on year and quarter on quarter and month on month. And that suggests that what I showed on the previous slide, that internet sales in the UK are holding up, is actually also seen from other perspectives in the industry. There's some constraints in here in the industry as well, which is warehouse space. Warehouse space is running out. It's getting really cramped. And new warehouses are being built, in particular as Alibaba and Amazon have snapped up existing sites. New sites are being built to accommodate for that demand. These are, of course, multi-year investments. And if we look at leases being closed, at new sites being developed, it's a strong indicator that the logistics industry has continued confidence in the growth of e-commerce to build sustainable infrastructures, multi-year investments to cope with growing demand. Who is, though, the consumer? Who has been buying online during this pandemic? And there are really two perspectives of this. Here's some interesting data from Eurostat, which shows what percentage of internet users for their own purposes or for private purposes have been using e-commerce in the last 12 months. And you can see it is nearly every single internet user. The European average, EU27, the UK is excluded here, and the UK is an early adopter, as we can see on the very right with 92%. Is around EU27 is around 72%, and we're seeing a steep fall off if we look at Southern Europe, in particular, more developed markets, Nordics, Germany, France, Ireland, and so forth, have been the leaders in that space. But if we look on the right side, we can see that growth in e-commerce, in particular in CEE markets, has been coming from first-time buyers. We can see, for instance, in Romania, plus 35% of internet users that for the first time actually tapped into e-commerce in 2020. So some growth was coming from first-time e-commerce users. But other growth is really coming from repeat users who are now moving their consumption. And on this slide, you can see there are, in a sense, two really distinct types of markets occurring, which I, through examples, illustrate here. One is, of course, the move from brick and mortar offline commerce to online. You can see that, for instance, as an indication, if you look at App Annie data, which tracks app use and app performance, you can see the rapid growth across very, very different countries in terms of shopping apps, online groceries, fashion, and so forth. So a move from brick and mortar to online consumption. But what happened as well is when people were stuck at home, they were purchasing in new markets, digitally native markets. And in a sense, the rise of Netflix, which is reporting results this quarter, and other video providers really shows that. But we saw also new markets emerging, in particular, if you look at what happened in finance and crypto with Robinhood and other providers, where people were using their time and their money to tap into this entirely new market, again, driven by e-commerce. App installs and so forth would count as that. What is the role of advertising in all of this, though? If these are some of the macro trends in e-commerce, how does advertising enable it? And also, how does the ad industry need to adapt in order to continue to tap into the e-commerce opportunity? I find this slide here from an investor presentation, these charts from an investor presentation in Group M, very remarkable. Have a look at the left side, where we see the whole marketing industry bucketed in 4 different segments. One is communication. That includes PR, but predominantly paid media across radio, TV, digital, and so forth. And then it includes other bits, experience. So this could be website design, it could be physical experience, it could be digital experiences, apps, sometimes even logistics would count as experience, for instance. But then you see commerce. So setting up of a Shopify shop, improving the customer journey, maximizing the value of the funnel, and so forth. And then technology. So MarTech solutions, analytics, tracking, and so forth. And if you look at the composition of all of this in a growing market, we can see that the communications bit is expected to be fairly flat, growing below inflation between 2019 and 2024. Digital clearly, as there's a redistribution game, digital growing stronger than the rest. But overall, that market for paid media is not expanding very much. The real growth will be somewhere else in these other areas. And if we look at experience, commerce, and technology, all these things are, of course, intertwined. And increasingly, the communications bit plays a role in enabling and augmenting and extending these other layers. So a first lesson is for advertising to tap into the, for the ad industry to tap into the e-commerce market, it needs to do more than paid media. But with all of this, there is a kind of changing role in a sense of how we think of advertising. And I think Luma Partners captured this very nicely with the illustration from the move towards a funnel to a cylinder. Typically, we've had a purchase journey from awareness, consideration, conversion, advocacy, and so forth in various iterations. But the point was we threw a lot of money into the funnel, into the awareness bit, widening it as much as possible, and then, of course, receiving in terms of conversion something much lower in the end. For e-commerce to be, if e-commerce advertising to be effective and sustainable, something else is required. And this is a cylinder model, which means we reduce where we allocate the money, whom we target, limit wastage with targeted ad spend, with programmatic, but increasingly also, of course, directly from the large e-commerce platforms like Amazon or Google and Facebook. Then maintain the scale with, or maintain the width of the cylinder with kind of more media, but then improve the number of conversions at the bottom. So this move from a funnel towards a cylinder model is interesting in itself. However, if we look at the economics of e-commerce, we can clearly see why this is important. So here's a slide from investment consultants A.T. Kearney, which have provided a waterfall chart of the margins in e-commerce. And clearly this will vary by brand and it will vary by country. But broadly, it has a very, very important message. And that is, of course, if you look at your sales, then you need to subtract the cost of goods sold. So this would be, for instance, the margin for an Amazon, for another shop, and so forth, which can be pretty hefty. Then you have the general and administration, in which advertising spend and marketing spend would fall. You have the fulfillment, the logistics, and so forth. And then you have an EBITDA margin that is slimmer than in some other industries of 5 to 10%. And if you look at the range of SG&A here, 25 to 35%, in which advertising falls, it is the bucket with the biggest range in all of these, with a kind of pretty strong range, apart from, of course, the margins that the platforms take, but which is fixed. So you can't negotiate on that. But it means your SG&A bit is flexible. And that means if you can reduce the cost in there, moving from a funnel to a cylinder model, you can really improve the economics of your overall e-commerce model. And this is really important. So advertising plays a crucial role, that means, in the overall economics and the overall margins of e-commerce. A big obstacle for brands is when they reach around $50 million in e-commerce sales, roundabout, because that means customer acquisition costs often skyrocket. And advertising doesn't generate the ROI anymore that it used to be when they were at an earlier phase. So ensuring that this cylinder model really sings and is effective is very important for brands to break through a glass ceiling of growth that many are facing in e-commerce. But this whole landscape of e-commerce is being altered through what you could call social commerce. And think of the funnel and how the whole concept of the funnel from awareness to purchase is actually collapsing in this world. So here you can see, for instance, how the website traffic from the top 100 e-commerce sites in Germany in this flow chart. You can see e-commerce traffic goes to brands directly, big stores. It goes to marketplaces like your Amazon, like your eBay, Otto, Zalando, and so forth. And it also goes to retailers directly, a Lidl and others, right? But what is happening is that new types of marketplaces are emerging right now, modeled on, and I come to in a second, model on a Chinese model that weren't there in 2019 and weren't even there in 2020. All of these players outlined here, from a Facebook with its various different apps, Pinterest, Snap with new filters, and TikTok, they are building social commerce platforms where the branding and performance are actually merged into one. You could call that brand performance advertising. And what's happening here? We've seen that a lot of e-commerce shopping is taking place as John Lewis called it, bedsheet shopping. It's taking place 1 in 15 purchases between midnight and 6 a.m. So on the phone, often looking at a brand for the first time and then pushing the buy button. We're seeing increasingly an integration of influence or influencers and reach, the content and the commerce, and a compression of the funnel into a single event where you see the ad and you can buy immediately, not going through multiple different touch points across different platforms. And this, of course, is sparking a large philosophical debate in advertising, meaning, is the funnel dead or not? A Scott Galloway would say, absolutely it is, whereas a Byron Sharp says, well, not really. We still need to think very clearly about allocation of brand versus performance budgets. So there's, in a sense, an academic culture war going on in advertising, as we don't have enough empirical evidence yet how this rise of social commerce is going to affect exactly the funnel, but there are strong indications that this funnel is being severely compressed, at least for some brands. China is really the bellwether for this. So if you look at the chart on the left here, on the very left, you can see the explosion after a very strong growth rate of social commerce, where social commerce already now makes around 13% of total e-commerce sales on WeChat, which pioneered this, but increasingly other platforms. In terms of demographics, in the middle, we can see it's already 1/3 of the entire Chinese population tapping into this. US and Europe, very mature digital ad markets, are lagging behind on this. So if we look at the total value in China 2020 of 242 billion in social commerce, it is much smaller in the US and Europe, predominantly because the prevailing social platforms that we have didn't really have this opportunity. But recent analyst reports from Deutsche Bank and others suggest that, for instance, Instagram alone will make around 10 billion USD in social commerce in 2021. We expect actually that across platforms dominant in the West, there will be around 15 billion plus incremental spend on social commerce in 2021. And the concept of social commerce is being expanded. So in a sense, we see socially enabled a move back to the future. We think of QVC and teleshopping. Increasingly, we're moving to live commerce as well, where pushed through vertical video applications where products are available live, pushed by influencers and creators with limited stocks. So combining the idea of drop shopping, where there's a certain drop of a product pioneered by fashion brands like Supreme and so forth, it's being married with live streaming and a QVC 2.0. And I already mentioned influencers and creators. What is also happening within the e-commerce space is what you could broadly call the shift from the influence to the creator economy, which was first coined by a blog post by a then employee, Li Jin, of Andreessen Horowitz. She's since left, but she coined the term of the passion economy, saying that with new tools, it could be from Instagram, TikTok, but also newsletter platform like Substack, for instance, individuals can create major economic value. So what's the difference between an influencer and a creator? Platforms have enabled the influencer economy. We know that they're monetized through advertising and paid content. Creators are influencers as well, but from a commercial model, there's one important addition, that is commerce. So putting out merchandise, for instance, starting on the back of their influencer popularity, restaurant chains, starting live events and so forth. So it's really monetizing the reach of social platforms in a very different way. And they're still doing advertising and paid content, but the commerce component is becoming increasingly important in that. And we can see, we look at charts from Signal Fire at the bottom left here, that there's a sizable group now of amateur and professional creators that are using those platforms. And we can really see how Instagram, YouTube, in particular Twitch, is also becoming very, very popular to enable these creators. Another trend that we're seeing is retailers. Retailers looking to replicate the Amazon model. We call this retail media a massively growing space. We all know that Amazon is a massive force in digital advertising. If we look at the annual ad revenue, which is exceeded $20 billion in 2020 globally, and they have an integrated platform from, of course, the stores, search, on off-platform advertising and so forth. But the question is, how can other large retailers in specific verticals and general interest retailers, how can they compete? And they're building retail media solutions, which in a sense is taking the trade model from the offline world and putting it into the online world. The trade model means that if you are, for instance, an FMCG and you want to have shelf space in a supermarket, which is on the eye level of the consumers, you need to pay extra. So the positioning of the products in the shelves, promotions and so forth, but also just the layout means you need to pay. This model is being transposed now into the world of online shops, where through sponsored search results, for instance, through ads on the side of the screen, special offers, this model is being seen in the online stores of large brands. Some big ones like Walmart are going alone. They're building their own proprietary solutions. For instance, they inked a partnership with The Trade Desk as a white label deal to actually sell this programmatically as well. Because in the first phase of retail media, it kind of meant taking these trade budgets, fixed budgets, manually executed and transposing them into the online world. The second model is really doing this programmatically. We're seeing other big retailers following suit, and we're seeing in particular special ones or specialist ones or mid-tier ones, smaller ones, using providers such as Criteo to enable this. Overall, we can see that despite this massive boom in e-commerce that we're seeing and the role, how it's changing advertising and how advertising is reacting to these new opportunities, it's still very early days. Globally, over 80% of commerce is happening outside of digital channels. It's changing rapidly, but it kind of means that we are seeing still, despite the recent growth, a massive expanding addressable market. So it's very important to get the right tools in place, to continue to monitor this space, for retailers to pick the right partners, for agencies to expand skills beyond paid media, and also for publishers and retailers think what role they can play to capture revenue outside of social platforms. And we're seeing social platforms doubling down on shoppable media, and new breeds of creators are emerging that are jumping on that bandwagon. And at IAB Europe, we are going to continue monitoring this space, and you'll hear more from us, in particular, deep dives into retail media, deep dives into how to break through the glass ceiling of e-commerce sales through advertising in the next couple of months. And with that, thank you very much, and I'll pass back to Helen to moderate the Q&A. Thank you.
Thank you so much, Daniel. As ever, very insightful, lots of good facts. Okay, so I'm going to start off. So I think let's start from the top. So just a couple of questions here. So just some further insights into exactly what is being bought online. and whether you have any insights into the top verticals that are benefiting from e-commerce sales. And then the percentage split, because you talked about the big ticket items and the smaller ticket items. Do you have any kind of percentage splits on those and what particular trends you'll see?
Well, that's actually an exercise for our next forum. We started researching data on that, but it's often not compatible across markets. So we're trying to provide a European perspective, and the classifications of goods and services is not uniform across Europe. So similar, for instance, how it's very hard to compare Nielsen data on advertiser verticals in one market with those of another market. So, but we'll follow up with that and provide further breakdowns.
Perfect. Okay. And actually, on your big ticket items, I can just say I bought a house and a car without seeing either in the last few months. So it is happening. There is definitely a rise. So do you have any stats, Daniel, on where people are searching and purchasing? So you talked about, the in-app, and just a question around it, what trends are we seeing? Is it still being done predominantly in browser, or is it in-app?
Again, a very good question. We don't have the data yet. So I think this question and the previous question will highlight a very important point, that the analytics landscape in e-commerce is still in its infancy. So we have very good on-platform analytics, but the entire industry monitoring still needs improvement. And we as an ad industry need, I think, in particular for e-commerce, similar metrics like we have for overall media spend, right? So which vertical is investing where, in which channel, etc. Having that could be done, for instance, by working with specialist analytics providers. There's a great one, where a colleague from Criteo highlighted that to me recently, called Micmac, which work with individual retailers to track actually which media channel, is it a Trade Desk, a Google, is their spend coming from. But the point is, these analytics tools, they are used on a one-on-one basis for clients, right? So if you are a retailer, you can see it for yourself. But we don't really have a horizontal view on how that pans out in the entire industry. And I think these are some really important metrics for the ad industry to invest in the right channel, to assess the opportunity in terms of verticals, to provide guidance to clients and so forth. So we need to move these analytics tools from something that is one-on-one on a client basis to industry tools. Yeah. And that will probably take a couple of years, and I see a similar trajectory to what happened in programmatic, where we saw existing kind of advertising measurement reach its limits, and then companies like Pathmatics and others came about to provide intelligence on who's spending what in programmatic, how the supply chain looks like. Then we saw, for instance, companies like Atomic, Pubstack come into the publisher market, which are also providing, which publishers like a lot, anonymized benchmarks on aggregated across their client base, how much automotive, how much FMCG, etc., is currently spending in the peer group. And I would expect the e-commerce analytics providers to move down a similar route, but it's still early days.
Okay, so I've got a question here. Can you give an example of a glass ceiling for e-commerce advertising?
Yeah, so the glass ceiling that I described referred to the customer acquisition cost. And there are kind of two components. We've seen products that even in its inception phase, you need to have, as a retailer, a minimum basket size to actually make your shop viable. Customer acquisition costs, if we look at, let's say, if you look at a cell phone contract, for instance, the customer acquisition cost for that, just through advertising, can easily be at around 600 euros. It's quite expensive. However, it makes sense for telcos because as a customer, you're really locked in for 2 years, so that this can be amortized across a longer period of time. Now, customer acquisition cost overall, because there's such a crowded space for attention right now with e-commerce, customer acquisition cost is going up, not going down. And as an e-commerce provider, if you can't get a recurring relationship with regular sales, you need to, with your first basket, in a sense, pay back what you paid to acquire the customer. That means for some products, cheaper products, for instance, that you only buy once, it's not even viable to do e-commerce. If you want to amortize the costs over time, you need a newsletter strategy, you need people to return to the store and so forth. So others are saying, all right, I acquire a customer once through paid media, then I use my own MarTech tools to ensure that they buy again and again. That's, of course, a bit of a gamble. So that's the first issue, to kind of get these economics right. The second then is if you have attracted your primary market. And for some e-commerce players, that's fairly niche, and you have decent sales. And what I heard in conversations with various retailers, that's around the $50 million mark. You see a massive jump in the cost of acquiring new customers because you're moving out of your friends and family and early advocator customers into the broader market where you need to massively compete for attention. For one-time purchases, but also for loyalty. And we're all flooded with emails, offers, and promotions. So getting that right is incredibly hard, which also means that not all e-commerce brands that we're seeing thrive right now are going to survive because this long-term loyalty is essential to recoup the cost of paid media.
Thanks, Tanya. I think you've perfectly summed that up. I think that's exactly what we're seeing at the moment with the larger acquisition cost. There has to be more emphasis placed correctly on retention and the incentivized buying, different ideas that people are having there. Okay, so we've got a question here from Tom, which is asking about China is clearly ahead in social commerce. The EU is differently minded for regulation. Are there barriers to the Chinese model coming to Europe? Great question.
Excellent question. Yes, we, in a privacy-first world, of course, are limited in terms of cross-site tracking, attribution modeling, and so forth. So there is a risk in all of this that the rise of e-commerce and social commerce is going to lock in more ad spend into walled gardens.
Okay. So question here, what role do you see voice and smart speakers playing in e-commerce? And I think this is kind of backed up by the facts that we've seen voice commerce will top 40 billion in the US by 2022. And we've spoken about this before, the privacy concerns are less so now, but it'd be great to get your thoughts on this.
Well, we have, so I looked around two months ago, we got now, I think 9 billion kind of smart devices installed. And again, the stay at home has fueled Alexa, Google Home sales, and others. We have seen both in media plans and in actual retailer focus, less emphasis on smart devices, speakers, and so forth than on just mobile commerce or website commerce. I think partly because it's still black boxed in terms of measurements and different ecosystems. Then we had early campaigns, early paid media campaigns on smart speakers that caused a privacy backlash. I do vividly recall a Burger King campaign that was playing on television, and that was using voice commands to activate people's smart speaker in the home, and that felt highly intrusive. And consumers went rogue and changed the Wikipedia entry of the Whopper, which was being advertised, to include some nasty ingredients. And whenever then the smart speaker was pulling up the Wikipedia entry, those ingredients were being referenced. So there was an early huge backlash. I think it is changing now. I don't know where the figures you stated are from. I'd love to see them in more detail. But looking at how close these devices are integrated with commerce platforms, like an Amazon, for instance, and how easily they can be manipulated in the sense of making a wrong comment or someone else in the household adding something to the basket, I'd say we predominantly see this in terms of recurring items. Think of batteries, think of groceries, think of small items of daily use that you need to reorder, where, in a sense, it is, could be a continuation of the kind of ill-fated Amazon Dash, the one button, reorder of washing liquid and so forth, being transposed into the world of voice. But I see it playing an probably interesting role, but more in the beginning, a more gimmicky role, and a role of reordering items of daily use.
Do you see the same for CTV, Daniel?
Well, CTV is very interesting. I think first we need to define CTV. I think there are as many definitions of CTV as there are CTV apps out there right now.
We have our virtual CTV event next Thursday. The first panel discussion is talking about definitions.
And the first answer to this is, let's look at the history of television, in particular of the pushes by the ad industry for over a decade to change the TV experience from a lean back towards a lean forward environment, with green button advertising, red button advertising, red button 2.0 advertising, and so forth, where when you liked something you saw, you press on a button and then the TV channel would go to a kind of pre-cached in the set-top box kind of product landing page and so forth. It was very hard to sell that, and it has always remained a minority. I think execution is much easier now. It's more, it's becoming increasingly frictionless with CTV, but moving a lean back into a lean forward environment, despite technical advances, and is very, very hard to do. So I don't see the biggest obstacle in the technical execution. The industry will always find something to advance, but it is to en masse get consumers to lean forward in CTV.
And I guess for CTV, you could also be talking about, movies, films. It is still a product that people are purchasing.
Yeah. So I think for it to work in CTV, I think one is important. It needs to be one click. Can't use the remote to enter any details. It needs to be one click. And again, the issue is, if it's one click, it's usually happening in a walled garden, the closed ecosystem, where through other devices you've already left your purchasing details.
Great. Okay, so let's look at the balance between e-commerce and brick and mortar, and how you feel this is going to evolve going forward, especially now as we start to come out of these lockdowns across Europe.
What is always interesting to see is investment trends and M&A trends, and an early bellwether, interestingly, has been Brazil. So there's a fantastic e-commerce newsletter that I encourage everyone to subscribe to by a guy called Hendrik Lauscher, which has really expanded my horizon on this topic a lot. And I regularly go through the investment and M&A section there, and you increasingly see business investing in hybrid concepts. So, for instance, if you think of e-commerce brands, particularly D2C brands, which grew up natively online, hiring, in a sense, co-location spaces for brick and mortar where their products are being displayed. So you don't buy there, but you see the product. You can touch it, you can look at it, test it, and so forth. So some brands see this as something, a new concept of having a more meaningful relationship between the product and the consumer, not just through a screen. then the transaction might be carried out online. And we see loads of those different trends. In particular, actually, which I didn't touch on at all in the presentation, in the B2B e-commerce environment. So we shouldn't forget that, similar to the B2C boom we're seeing, there's a major B2B boom. And again, in Brazil, there are examples of now the agriculture industry moving into e-commerce sales. So you look at the tractor and other agricultural machinery, you look at it offline, but you purchase it online.
Great. What we'll do is, when we send the recording to everyone, if you can send me the newsletter, Daniel, so that we can just share that as well, because that's definitely something. And just in terms of kind of staying on this theme, looking at lasting behaviours, what behaviours, consumer behaviours, do you see kind of sticking with us from this massive growth that we've all been forced to stay? You've all said that we're creatures of habit. You actually don't think the pandemic's going to change us that much, but will it?
So we at IAB Europe started to discuss this early on, because from our members we've seen similar questions probably since May. Is this going to stick? Is something going to change if we go back to normal? Quite frankly, I think it's too early to say, and there's contradictory evidence if you go also into academic literature. But there's some kind of interesting writing on economic history that provides some really, really good teachings. And those were neatly condensed during the Lehman crash, in the aftermath of the Lehman crash, in the New York Times. Fantastic article that condenses around 10 different academic articles. And they were all looking at the same problem, which is, are seismic events like a war, an economic collapse, are they changing how people go about their daily lives economically in a systematic and ongoing manner? And the evidence largely is not really. And to give you an example, after 9/11 in the US, there were many articles celebrating the religious reawakening of America, when church attendance went through the roof, and people thought, this society is becoming more religious again. But after a couple of months, this tapered off again, and we were back to normal in a sense. We also saw, in the aftermath of the financial crisis 08-09, savings rates skyrocket. So consumers, in particular in the Anglo-American environment, very used to credit cards. Me as a German, we always have our little savings wallet. So savings rates were up again, but a couple of months later, they were being rebalanced to kind of pre-crash levels. And the only evidence that we have from past events is that for young generations, for people around 18, 24, 25, these major economic events are traumatic events. And it is this trauma, this psychological trauma, that triggers long-standing changes in consumer behavior. So we could extrapolate this notion of trauma and say, are the future e-commerce customers, primarily those who suffered a trauma? I think, and it's always difficult to say, right? It's pompous to say that what we've seen is a unique event in history, because most things aren't really unique. But there is enough evidence, I think, from data from the ONS, from revenue and investment data, that the e-commerce trend is here to stay. And it was going to come anyways. The investment and consumer decisions have been moved forward a couple of years. There might be a little downward correction, but without any academic study, if we're just looking at the investment data, it seems to broadly to stay, differently from the past.
Brilliant. Thank you so much, Daniel. And I think that's a good place to end this. So thank you to everyone for joining us for today's session. And Daniel, of course, thank you so much, because I know how much work you put into all of these presentations and the stats that you find. So we will be sharing the deck with attendees of this, and of course the data that Daniel does put together is exclusive for members of IAB Europe. We've got some fantastic events coming up next week. So if you head on to our website, ibeurope.eu, and go to the events page, you'll be able to see next Thursday we have our virtual CTV event. The following week we have our virtual programmatic event. And then in May 25th to the 27th, we have our flagship event, Interact. And Daniel will actually be kicking off the first day with ADEC, which is our benchmark to investment figures across Europe. So that will be hot off the press. He'll be presenting that on the 25th of May. So please sign up, all free to attend, and we look forward to seeing you there.
Thanks everybody for joining, and thank you for the questions.
Thanks so much. Have a lovely afternoon. Thanks. Bye-bye.